What's up, guys? Eric here. Well, if you followed Fired Up Wealth for a while, you might know about Know Before, KNBE. You might even own the stock thanks to our YouTube channel here. This was on my top 20 cloud stocks that I recently did as patron only, and it was number 11 out of the top 20. Now, this one's up over 30% today on a buyout possibility. And if you own the stock, you're wondering, should I sell? Should I wait? What should I do? If you don't own the stock, you're looking at it and saying, hey, this buyout's for $24. It's at $22.62. There's still $1.38 there. Should I buy this stock? And what are the risks if I do that? This video today, we're going to do a quick recap. I'm going to tell you what I'm doing with my money. I own 1,000 shares of Know Before, under $20 a share, and I'll share with you what I'm going to do with my position. Now, this market cap after the bounce is close to $4 billion. Of course, it was under $3 billion just last week. You could have bought it at $17 and change on Friday. The 52-week high on this is $29.50. 52-week low, $13.78. On Google here, it's showing a P ratio of 535, but of course, you usually use the SaaS metrics. Now, when I did the top 20 cloud stocks, Know Before was about an 8.1 EV NTM revenue, so 8.1x. Now it's over 10, pushing probably 12. Now, the free cash flow on this, 29% as the last earnings, and the rule of 40 is 65%. So this is one that's generating free cash flow, has a really good balance. So you look at that rule of 40, they're bringing in some cash, they're profitable, they have free cash flow, and they have pretty impressive growth for the size of the company and what they're trying to accomplish. Now, if you want to know more about Know Before, I do have a deep dive video here on the YouTube channel, and I'll put a card at the end of the video. Watch this video first and go check that out. If you're not familiar with the business, in a nutshell, what these guys do is training as a service. So it's a software as a service company, and what it's doing is it's teaching your employees cybersecurity awareness, teaching you on what not to do. Don't click that phishing email and so on. They call it the human layer, the human element. Know Before stock soars on potential takeover by Vista Equity Partners. So this is an all cash proposal. Now, Vista already owns part of Know Before. I think it was 9%. This represents a 39% premium as of closing Friday at $17.30. And that might sound okay in this kind of market, but the reality is I wanted to own Know Before for 5-10 years. I thought this was going to be a multi-bagger type stock. So I'm not excited at all. And what's going to happen here is, consistent with its mandate in consultation with its legal and financial advisors, the special committee for Know Before will carefully review the offer, the proposal, and other potential value creation opportunities. Maybe there's other partner or other buyout offers possibly. Maybe you'd have a bid war to determine the course of action that it believes is best in the best interest of the shareholders like us. And so the problem is we don't know what's going to happen here. We can take a risk. Right now, I'm not selling it under $24. If it gets to $24, the question is, do you sell it then? Well, there's a few things that can happen here we'll talk about in just a second with my kind of final thoughts. But before we go there, Know Before said there's no certainty that any transaction will be completed. That's important to note. Of course, they're just going to say that whether they've already made the decision or not. But we want to give them the benefit of the doubt and believe that they're going to look at the best interest and say, is this the right price? Now, Truist Securities came out. They're an analyst that covers Know Before, and they believe that the fair offer should be $28 to $30. So maybe there's a counter offer. That'd be much more attractive, of course, $28 to $30 versus $24. So that's one possibility. Now, I own 1,000 shares, and I'm going to tell you exactly what I'm going to do with my 1,000 shares. I have 1,000 shares below $20 cost basis. Before I get into my final thoughts, I do need to announce that this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. And if you're new to the channel, hit subscribe, click that like button, drop me a comment. And towards the end of the video here, we're going to have a card that's going to give you a deep dive on Know Before. So go check that one out. So I have 1,000 shares below $20 cost basis. Nice little pop this morning. What I'm going to do, first of all, is I'm going to watch really close to see what happens. There's a chance that there could be a counteroffer. There's a chance that the board even just basically turns down the offer. Then there's also the chance that antitrust or Department of Justice could turn down. They could basically shut this down and reject the acquisition offer. So there's all these moving parts. We don't really know what's going to happen. I don't think there's a strong probability of antitrust blocking this because it's a $3-4 billion market cap. Generally, you don't see a lot of resistance there, especially with private equity. So I don't think there's an issue there. When I think of the price, if this would have happened a year ago, I honestly think that they would have paid $40 to $50 for the stock, in 2021. Of course, now everything is beat down. It is promising to see some mergers and acquisitions here. I think you're going to see a lot more M&A over the next year, especially if tech continues to roll over and get crushed. But when I look at what I'm going to do with my shares now, I think what I'm going to do is I'm going to hold on to them for now. Right now it's trading at $22.50 or whatever. If it gets to $24, what I might do is I might sell 500 shares, half my position, and sell the highest cost basis. I have some that are like $22 cost basis. I'd be able to sell and make $2,500 profit on those 500 shares. And then I'd own 500 shares still with like a $16 cost basis. There's some risk there no matter how you do it. The way you got to look at it though, you're making some profit, in a bear market, not necessarily a bad deal. Of course, I'd love to hold this and not have it get sold and hold it for 5 to 10 years, but that might not be an option. So I'm going to kind of hedge this. And I think the smartest decision in this environment, if it gets to 24, I sell half. The opportunity cost there is if they counter back and you get $28 or $30. And then there's always the chance that it gets rejected or the deal falls through and then the stock could actually go back to $17 or $18. So it's a tough situation. If I were able to keep 500 shares at $16 cost basis, get some cash, get 12 grand of cash, whatever that number is, I think that'd be really healthy for my portfolio right now. And that's what I'm going to do with my money. You have to decide what's best for you. I appreciate your time and attention. Have a great rest of your day. Take care.